Hi, fighters. How you doing? Travis Witherspoon here from Carter Cow Capital, helping you fight for your financial freedom throughout the Forex market. Today is Wednesday, and it's an Academy class session. So what we're going to end up doing is talking about the ABCDs of trading. But before I end up getting started with that, I wanted to welcome all the new members that end up getting started with us. We're actually getting very strong with our overall numbers. I would actually like to be able to set up more of a meet and greet where we'll all meet up and kind of chat and go through some trading tips and everything else like that with the Forex market, and just be able to connect and build a community from there. We actually end up doing over 500 pips in 2 days with the pound US and pound New Zealand dollar based off of some of the educational teachings that we end up doing in some of our academy sessions and some of the classes that we end up having outside of this. So very excited about some of the stuff that we end up teaching, because one of the things that we end up talking about was the ABCDs of trading, and we was able to use that to be able to make a huge profit. So without further ado, let's go ahead and jump onto the charts and let's get an idea about what we're going to end up doing. So the ABCDs of trading is really kind of based off of this one thing to be able to understand. And if you're looking at this chart, this is the pound Australian dollar, and it's the daily chart, but this can happen off of any chart that you're looking at. If you notice, this market, or any market really and truthfully, does not just go up or does not just go down. What you notice is the market makes waves. The markets makes based off of that ends up creating trends. Now, with just looking at this market, and I squeeze it down just a little bit, we can be able to see over in this area on this left hand side where I end up boxing it in, we can end up seeing higher highs and higher lows within this section, meaning that what actually ended up happening was that it developed a uptrend. So let's use the brush tool. Let's go ahead and give an example of what it looks like. If we can see that, we can see a higher high, we can see a higher low, then it extends out to a higher high, then it makes a higher low, extends out, higher high, higher low, higher high, higher low, higher high. And then after that, from there, if we end up moving this chart and we end up erasing everything from here based off of what we're looking at, and let's say we get off of this area and delete that and delete everything that we just did, and I make a box in that same area after that, going from right here, you actually end up seeing a forming of a downtrend. And where a downtrend happens, you end up seeing basically lower lows and lower highs. Now, the reason why I'm saying that is because that within this, you end up seeing major and minor waves that actually end up happening. So if we're looking at it right now, you see lower low, lower high, lower low, lower high. And then from there, as we speak, where the market is actually moving right now in this market, and I'm talking about this section right here, we actually can see that it's starting to form more of an uptrend again as we speak. So where does the ABCDs come from? The ABCDs comes from the actual movement of that actual swing. And without really getting into all of the detail, I want to be able to talk about how the market actually moves. And I'm going to break this down, and then after that, we're going to show it on the chart. I'm going to try to see if I can be as quick as possible in being able to do this. So let's say in an uptrend, what will end up happening is the market actually moves up, right? So we end up having this large movement of a swing that ends up going up. From there, typically what happens is the market will actually end up retracing or going down from that position. And as long as it does not break this original position from this movement, then typically what happens is the market will extend to a new high. If you notice, when we end up looking at everything on this side, that typically happens every time that we end up having that movement on this left hand side. I'm going to get off the screen real quick so y'all can be able to see it a little bit more. So we end up having this high, we end up having this low, then after that we end up having this high. So in a uptrend, what ends up happening is this movement is called a rally. Now from that rally, you'll end up having a which is the original position. Then after that, you will end up having a B, which will be the high of that move. From A to B, you'll end up having a rally. From there, the market will end up basically exhausted, meaning that people that was in a buy in that position end up taking profit, and now they're starting to wait for lower prices, and the sellers are basically starting to regain control. Now, this is not a position where you actually should be looking to sell, and if you do sell, it should be very short and only looking to scalp at the market from there. But if you know that there's a defined trend, I probably wouldn't look to trade. But from there, the market will end up retracing from this original position, from this AB position, and then after that, as soon as it starts to U-turn, based off of the position of where it goes to, you can almost predict where the D extension is going to end up happening. But from point B to C, you'll end up having a retracement. Now, obviously, since you have A, B, C, then the D will end up being the extension of the move and a newer high that ends up happening. Now, the way that you can tell that it's a newer high is because if we end up placing two horizontal lines between the A and the B, you can basically look at that as support and resistance. As soon as it ends up breaking the resistance, it's going to end up going to a new high. Once it breaks that new high, then more than likely and extends out to the D extension, then what you'll end up seeing is the market will start to retrace and start the whole ABCD pattern all over again. Now, the only difference from there is when you end up going down and making the move again, and let's say if that was the C, and we end up having a trend line that actually goes down, when it retraces again, now C and D turns into A and B, and now this new retracement will end up being the C retracement, and then after that it will extend out to new highs. So let's take a look at this on the chart. Let's kind of get a quick example, and I'll show you how you can be able to learn more information about what we're actually going through, because I'm going to end up having a special class about this in which we already have it, which is the Fibonacci Fundamentals, but we're going to end up having a special class that we're going to end up having this week, and I want to go ahead and invite everyone to be able to go through that. So let's move this out of the way, and let's just focus in on this side again, where we end up talking about it once again before. So I'm going to put this right over here. If we look at it, our lowest low at this point was basically A right here. So if you notice, the market ends up moving up. Once it ends up moving up, it ends up getting towards a fractal high. After it ends up hitting that fractal high, it starts to retrace back down. But the fractal high in that position was the B of that overall position in that move. So basically what ends up happening from there, if I put a horizontal line in between that move and I put a horizontal line in between this area right there, there goes the support and the resistance of that actual first initial move. From there, as soon as it breaks the actual resistance of the B, which once again, this was the rally of the position. Once it starts to U-turn first, let me stop. Once it starts to U-turn from this position, and we can see that it starts to U-turn, then the fractal low from this move will actually end up being the retracement. Now, once it extends and breaks through the B level and then goes and makes a new high, then it will extend to a new high, in which in this case was basically right here. So from C to D will end up being your extension. And then the process starts all over again. Now, the funny part about this, typically when you end up having retracements, that ends up happening. And you start the process all over again with A, B, C's, and D's. Typically, the market goes back towards the B, or somewhat very close towards the B, or that area to where it was past resistance and actually turn it into a new support. If you notice right here, the market ended up retracing down to this level right here. Once it retraced down to that level, what actually ended up happening was this. C turned into A. D turned into B. C was the new retracement, which was that level. And then after that, it extended out to a new high. Well, if we end up placing in a horizontal line in that port, that goes our new AB boundary, which is right here, which was our area where it rallied. Then after that, it retraced in this area. And now the extension that ends up happening is from here to there. And even though this is more of a shallower type of extension and it did not extend out like the previous move, it still made a new high. From making that new high, the C to D area of this move would end up being the extension. And then after that, you start the process all over again. If you notice and you look at it, what ends up happening again? The market ends up retracing, getting towards the B or getting close towards the B. And then after that, extending out and doing it all over again. And if you notice, the process starts all over again within the actual move. So that's in an uptrend. The same thing happens in a downtrend. We end up having that same move. And if I just make the lines again, now we end up having, instead of a rally, now you have a drop from A to B. From that drop, the market end up moving back up. That was a retracement in that area. From that retracement, you end up having an extension that end up happening from that area. So what I'm trying to prove to you is this, because let's say this will be your A for it to drop, the A to B zone. This the C, which was the retracement. This was the D for the actual move. The thing that I'm trying to prove to you is this: one, the market doesn't move in a pattern to where you just go up and down. The market moves in waves. So the question is, how do you figure out where the actual C is and where is the D going to end up being? Well, in order to be able to find that out, you have to be able to join my webinar that's going to end up happening this week. I'm going to end up doing one tonight. I'm going to end up doing one on Thursday, and I'm going to do one on Friday. If you're interested in being able to learn this information, this is where profits actually come from. So if I provided value for you, please make sure that you end up clicking on the link in the description below. If you're new to the actual group or you're new to any of the videos that I actually end up joining, please make sure that you end up clicking on that like and subscribe button so you can be in tap with all of the news that we end up having that comes out each and every week. Thank you for your time. And like always, plan your trade, trade your plan. Sorry about that. Everyone, y'all have a good one.